Welcome, Judy, to another episode of SALTovation. We're going to cover a couple of different topics today. We're going to start with something that a lot of business taxpayers don't intimately know about, which is the automation cycle. Can you tell me what that is and why business taxpayers need to pay attention?
Well, from a sales tax perspective or even a state tax perspective, you need data. And so every business can figure out their product, their customer, their marketing strategy, possibly billing them for money, but they haven't thought about what it means to be a vendor and be a taxpayer. And so they don't always gather the right data when they get started to be able to build a compliance practice, right? So they can comply with the laws within the multi-state, multi-city, multi-county, multi-country jurisdictions in which they're operating, especially now that we've got Wi-Fi, right? You're listening to me right now on a Zoom video squadcast thing, right? Who did that before? I could just record this and get this out to the public like right away with a little bit of editing. So because of technological changes in the world of business, we really don't have the boundaries of a storefront anymore. So we have a virtual storefront online and we want to take money and we could get them a good or a service, and we can do that via the internet or via shipping FedEx or UPS. So we are not going into stores and shopping as much as we used to anymore. And there are other things that we consume. I just bought, for example, tickets for my grandchildren to go get a ski lesson. And I signed up online. And when I went to do the lesson in person, it did not have all the grandkids in the lesson I bought them. So it only showed one kid. So then when they took the input for that information, I go, no, it's in the notes. The other kids are included. And I paid for it. So I sure as heck want that to happen. So there was a disconnect between who was the consumer of the class and who actually signed up for it, right? Because the way they gathered data. So they didn't even gather the information. They did gather it, but not in a way that was meaningful for the end user to receive it. So here's this poor instructor thinking, I'm going to teach one kid under 3, and now I'm teaching 3 kids under 5. That's a big difference in your expectations, right? So think about that from even a governmental standpoint. I delivered my widget to you. It's awesome. I have this beautiful pink water cooler that I love to drink out of, my sippy cup, I call it. Keeps my water cold. I like the color. And I made it, and it's lovely. And it's pink because it's Barbie. And so I have a great product. People love it. They love the pink. I logo it, something like that to make it unique. And I can send this to anyone if I can get this made in China or some other OEM in the world. I've invented this idea. It's a really cool suction. It comes off and on really good. It's a cool straw, so it doesn't have all the whatever phosphates in it that plastic has. It's all good things. But I figured this out. I figured out how to build it. I figured out how to make it. I figured out how to store it. Now I figured out how to sell it. So everybody loves this pink particular cooler, water dispenser, drink dispenser, whatever. And I got to send that to your front door. Well, I'm going to sell it to you for $20, and I'm going to give you free shipping if you give me 5, if you buy 5. Okay, so then I got to get you 5 of these because you ordered them, and I'm going to take your credit card and I'm going to ship it to you. So I might have one system of record that learns how to ship and manage my inventory, and I'd have another system that takes your credit card. Stripe is a great example. I don't need more than honestly you typing your number in and a CVC code, maybe a zip code. I don't need your actual address in my invoicing system. I could do that through my shipping system. If you don't marry those two together, you can't charge tax properly because the credit card provider isn't gathering that data to tax it. You took a different system to ship it. And because you didn't marry those two together, you aren't giving the data you need to comply with your sales tax duties. And so that is the automation cycle, because there are over 13,000 jurisdictions in America for sales tax compliance. Some of those are state collected. The state of Texas collects on behalf of 1,714 jurisdictions. California collects on behalf of 257 local jurisdictions. Colorado is about 683 local, and we have 72 home rule cities. So in order to know that front door address location, you could be actually located in 5 jurisdictions that collect tax. Some are collected by the state, some are collected by a city, some are collected by a county, some are collected by a special district. If all you get is a zip code in your billing system, I don't know if you're in Denver or Glendale in Colorado. I may not know if you're in Austin, Dallas, or Fort Worth. If you don't get better information into your billing system, you can't source the sales tax and tax it appropriately at the right rate. There's a multitude of layering in the rates in sales tax, the state, the city, the county, a special district. That all adds up to your 8.81. From a shipping perspective, I've got to get you these 5 tumblers. So I gather that data. I just didn't marry the two together. Well, if you don't think about how to do that and at the outset, you're not giving sales tax automation the ability to properly tax this tumbler. And so that is where we start a little bit before we think. And I deal a lot with companies that had started and have been wildly successful getting their good to a customer, but didn't even think about what systems they put together, cobbled together, I would argue, in order to meet their tax obligations. So we have to back out of that to back into that. And I really wish more business, because we are not sightist in a storefront anymore, we don't think about getting a license where we are. We don't think about where we're sending to, but we can, because those barriers to entry are gone. You don't have to send things to a store anymore. Amazon took that away by creating, an online catalog. And now everybody's open to buying things from people all over the place, all over. Temu, China. They're everywhere, advertising everywhere. They have some cute stuff and it's cheap. Is it good quality? I don't know, but it's cheap. I'll buy it. So the ability to get in front of a customer now is so huge, but the data to gather the tax information is sometimes forgotten. And so that's what this automation process is. And honestly, think about anything, an ERP system, your billing system, a financial accounting system. If you were going to replace your engine, would you just go to not expert to do that? Will you just change your oil yourself? How do you recycle the oil? How do you dispose of it? I mean, you really want to go where the expertise is. So you need to understand all the things in the cycle, the entire machinery in your business process, and then you know what pieces you can automate and how they connect to one another. That's part of the automation cycle. So you're gathering all the inputs in the sales process to delivery to properly source tax.
So we have this automation cycle, and data in, is relative to the quality of the data out. But there are other places where software fails, where it doesn't complete the job, where it's not one and done, it's incomplete. Can you talk to me about those areas?
Well, I could link that to this recent experience I had buying a private lesson for my grandkids to go skiing, and the person that was entered as the consumer was one of the kids, but not all of the kids, and it was added as a note. So the data was gathered, but the way it was spit out did not explain there were 3 kids in lists versus 1. Okay, so think about that in general. The thing with software is they do this thing called a minimum viable product. Doesn't make sense. Will people buy it? Start. And then over time, you tweak it, make it better, make the user experience better, but you really didn't know what you needed until you actually had users. And even that gets tweaked. I mean, even if you look at websites today versus when I started looking at websites 30, 20 something years ago, they didn't have cool downloadability. You couldn't put videos on it. You couldn't make moving graphics. You couldn't modify things. Right now, that stuff's happening all the time with software. It's constantly being improved, made better. And so the problem with automation is you never can set it and forget it. It's never set up for you. It's set up for the many. And so your unique business process isn't reflected in that tool or your unique circumstances. So I laugh because we think text is going to solve everything, but it only solves for the general things, not the specifics. And so the user problem is where tech fails. And the other thing I really struggle with tech is it has been subsidized by private equity. So you have a false concept of how cheap it is. There's no way it's an accurate reflection of the labor that has gone into it. And the way they try to monetize it is by having a ton of users. Make it cheap, spread it across a lot of people. We have a big ROI on multiple users, but with a really cruddy experience. So we don't really even understand what software is. It's really replacing personal services, right? But personal services are personal for a reason. And so you really need a combination of automation with advocacy and advisory to make the whole thing work. And I can't tell you, I'm sure you could think this yourself, how many times you call the help desk and get the runaround for like, why didn't I click this button and it didn't work? I give another great example. I just had my bank accounts hacked. I had to change my bank account after 32 years with the same bank account. And I set up an auto bill pay to be paid on X day of the month. And I didn't put the right date. So I don't want to go through and reset up that vendor and add that number, but my bank can't allow me to change it. Can't. I have to cancel that old payment and add a new one. So I got to go in, figure out what the account information was so I know where to pay it. Got to go look that up somewhere. Got to go type it in again and set up a new monthly payment because there's limitations in the interface. And I think we all experience this every single day. Software is great, except for when it doesn't work for the unique thing we need. It doesn't do a good job with exceptions. And that's where it fails. And I think a lot of software is sold like a timeshare. It's sold and not bought. People are looking for instant solutions. They want instant gratification. But what they really want is you to sign. From the software perspective, it is sold. You sign and now you're stuck. And you're going to make it work. And you're very annoyed because you thought it was going to do all the things they said it was going to do, but you didn't realize how difficult it would be for you to set it up. And that's okay. Doesn't mean we should get rid of software. It just means we need to go in with our eyes wide open that it has its limitations. And it is not subject to non-failure, right? What if the internet goes out? I was just in Europe with my daughter last summer and she was trying to find us a laundromat. Well, we're in Switzerland. Okay, people speak in German, Swiss German there. I mean, it's not in English. So we can translate, figure out how to get around on the tram, and see which side of the track to be on to get to this laundromat. But my daughter didn't know how to read the subway map. She didn't understand like each of the stops along the way. And we had a wonderful old technology, new technology lesson, mom, daughter, where I thought, you've got to understand the map so you understand what the technology is telling you to do. And if you can't read a map, and that phone fails you at this moment because the Wi-Fi isn't working or the cell coverage, you should understand how to do tools despite having technology and enhance your experience. So we've got to make sure we marry those two together so we're successful, I think, as advisors who automate. And so we have two different narratives coming from tech and people. And, everybody's AI. Nope, it's never going to replace personal services, but it will enhance them. And that's good. But there are limitations to it.
Right. You mentioned exceptions. Can we just stop on that for a minute? Sort of some of the exceptions that you see in working with businesses that, cause a short in the automation.
Yeah, well, from a sales tax perspective, a lot of people don't understand what nexus means. They don't understand all the local jurisdictions. They don't even understand what their legal footprint is in a state outside the state in which they're located, i.e. an employee, a warehouse, an office, inventory, something like that, where it's more of a physical presence. They're just selling into that jurisdiction. They don't understand how to set themselves up as a vendor, out of state, in state. And, sales tax has been around 100 years. People rode up in their horse and buggy, on their horseback, saddled up, bought their things, came home. The tax occurred at the store. Now tax occurs at my front door. That's a very different story for the vendor who delivers to my front door versus the vendor I walk out the shop with. Okay. So we have had to morph our world of automation to understand that process. And so the failings of that are the jurisdictional indicators for locating the sale, understanding how the sale got to the consumer. Was it drop shipped from a vendor? Was it sold directly from my warehouse? Was it sold from Amazon? Was it a digital good? Was it software? Not delivered really anyway, right? Accessed. Very different tax answer for that. In the laws of sales tax, tangible personal property is taxable. Everywhere that has a sales tax, services are not. So what if something's a service and a product? What if it's digital? That determination to understand that flow of goods is widely misunderstood by the taxing vendor system. It is not well explained by the software companies, and it becomes a huge trap for the unwary. Give you an example. I have a client that did all their mapping, set up sales tax software, Avalara, yay. We did everything, but then they had a change in employees. They set up some new codes to invoice customers. They turned off the tax by intention. They didn't even think to map it. They thought it's not taxable. Pennsylvania came in and said, you owe $500,000 because you didn't collect tax on these items, and we can think they are taxable. So that is where software fails you. If you don't understand, typically you map to an exception. You don't map to a tax. So you have to turn on nexus. You don't turn it on right. First problem. Jurisdictionally choose the wrong jurisdiction. Set up your license incorrectly. Third problem. Map your products incorrectly. Don't understand what it means to taxability map. And then you think the vendor says T, NT. You can't even validate it because the vendors aren't going to tell you their secret sauce. They're not going to give you their location software. They're not going to give you their tax answers. They're just going to tell you what they think that answer is. You have no idea if it's right or not. So you think, oh, I picked that. That company's taking care of it. No, they're not taking care of it. They're taking care of what you picked. And you picked wrong. And that responsibility falls on you. And so that's where software, especially sales tax software, fails to really educate the user experience. And then we have IT people leading IT people. Hey, it's IT, it's tech, let's do it together. But there's no expertise in the tax window or the finance window or the shipping and distribution window or the marketing and sales window. So we have a lot of people mixing in the sales pie to get a customer served, and all that information is not getting disseminated correctly to allow for tax technology to be successful. So that's where it fails. And it's big money for the vendor.
We're seeing more of this happen now. We're so far out from Wayfair. Companies jumped in with software vendors, or they adopted platforms, thought, I've got this on board, I'm done. But now we're really starting to see the issues come up where those fail points have happened. And so at a certain point, as reluctant as we are, there comes a point where it's time to rip and replace. The software is just not a good fit. Talk to me about that. When does that unfortunate situation happen?
And I think that's common. I give the example of QuickBooks. A lot of companies start out, they use QuickBooks. It works really well until you get to a certain point or a certain width or depth or whatever. And you're like, I'm going to go to NetSuite. I'm going to go to Intact, Sage. I'm going to go to Oracle. I'm going to go to SAP. I'm going to make a different choice about my financial accounting software. I'm not going to use Excel, and so sales tax is the same way. There's lots of there's probably 10, 15 products out there in the marketplace. They all have different mentalities of how they connect with which products, with which interfaces. And then you also might have a situation where you started with one thing and then you grew to something different and you needed to rethink that information that you're gathering from your sales tax automation system. And you might pivot away from that. And I will say some of the products are sold based on transactions. Why would you want to pay a penny every time you run a sales tax calc just to commit a transaction or to run a bid? That can add up if you don't buy it correctly. That could cost you hundreds of thousands of dollars. So do people want to pay that much for sales tax software? So the transaction-based pricing can be good and it can be bad depending on your facts. The system limitations of connecting to this interface and not connecting to that. You've got a couple different ways you invoice customers, B2B, B2C. Different interfaces, they have different needs. You need to marry that data together and have one tax filing. Sometimes you might want one in one and one in the other, and you add them together and you have someone do your tax returns. Because sales tax returns are not automated. You can automate the data, but the filing is manual. It is in a state system. It's never going to be automated because the states are the ones that collect the data. And they each have a different system of record. They're not the same, and they don't have the same tax structure. They don't tax the same thing. They don't have the same rate. So it is not an apples to apples comparison in America. So you may decide it's time that this product is just not got all the things I need, and I need to do more things and gather more data. I need to add another platform here. Or I might say this is a new business unit and I'm going to use this here because this is the best need for that business. And I'm going to use this here. And so I'm going to have two systems. That's could work too. So it isn't always set it and forget it, first of all. And you may decide it's just worth it to rip and replace. I'm putting myself at too much legal risk to actually be having my filings be incorrect and maybe materially understated. So that's when or it's becoming cost prohibitive. Right? I mean, why would you pay more for sales tax software than you do for your general ledger system? I don't know. Maybe you would. But a lot of people might not think that's valuable. It just depends on your facts.
So we've covered a lot, but one thing that we haven't hit upon is how home rules can impact the whole tax profile of a vendor. So can you talk to me about how locals come into this equation of the automation cycle?
Well, I was mentioning earlier, there's 13,000 taxing jurisdictions, give or take, in America. So I gave you the example. Texas has 1,714. It's all collected on the state form, but Austin has a different rate and a different county and different regional districts. We have cultural districts, we have baseball districts, we have special districts. We fund our zoos in Colorado through our scientific and cultural district, which is like 1.1% of all the different buckets. So we have to put those in the right buckets because the tax goes to where it's delivered and consumed, right? My front door, my business address. And so the issue with home rules, and we have several home rule states where there's separate filings for the cities than there is from the state. So you don't even have one system of record. Alabama, Louisiana, and Colorado are those. Arizona was the same, but now they collect on behalf of all the home rule cities, but they license separately. So you still have to pay your license fee in Arizona, even though you don't have to remit separately to Tempe and Phoenix. Okay. But Colorado, we're still working on that. We have a set system. Alabama, Louisiana have a one rate. Texas has the same. You can choose as a remote seller to have a one rate system, and they'll just disperse the tax amongst everybody without really knowing who gets the most. I don't even know, because what really tax is supposed to do is benefit those that pay it, right? So if I'm in Dallas versus Austin, there's different needs in Dallas versus Austin. That's why there's different rates, and there's different people that live there, and those taxes go to pay the schools, the fire departments, the roads, the infrastructure needs of those specific cities and counties. So they want their allocation of the pie because that is based on their constituency, the humans that live there. So they're trying to support the humans that live there. That's what government does. It provides infrastructure so that we can all drive on the roads and have lighting and have a police force and have schools for our kids. That's all government paid for, and that's subsidized by the state and local tax system. So the home rule is a special constitutional issue at certain states that allows these cities to separate from the state. So let's just talk about our federal government. We set up our system in 1776 because we didn't want a king. So now we have 13,000 kings. Our states are kings. Our cities and counties are kings or queens. So what has happened in America is we said, oh no, federal government, we're not going to have that same tax system as you. We get to do our own. That is provided for in our U.S. Constitution. However, we also have something in our Constitution that says you may not discriminate against interstate commerce. You may not treat an out-of-state taxpayer better than an in-state taxpayer. So we have to wrangle between this autonomy, the supremacy clause, and this interstate clause, because we are America after all, right? And so we have this complexity, and then within the complexity of the state system, we have the complexity of the cities and the counties, which when this all got set up in the 20s and the 30s, people wanted control. They know what they need locally. And I think that's kind of true. I'm in Steamboat Springs, Colorado right now on spring break for my grandkids. And Steamboat has a very different need as a skiing and ranching community than city and county of Denver, where I normally live. It's a bigger constituency. It has a different footprint. It has a lot more humans living in it. It's a different lifestyle. It has different weather and resources. And so it has a different tax profile. And that is okay, but it doesn't always agree with the state of Colorado's tax profile. And so we have a problem where you can't apply the rule to Colorado that you could apply to Denver or Steamboat, because they get to choose to do something different. It's a problem, to be honest, from a compliance perspective, when you're a vendor being the fiduciary duty of collecting tax on behalf of a government. It's too much, honestly, for business taxpayers to deal with, but it is a system we have allowed to happen and evolve over the couple hundred years we've been a country.